Hello and welcome. Thank you for joining us today. We are broadcasting live from Park City, Utah, where I am, and Hawaii, where Craig is, and Derren, you're where are you again? I'm sorry.
Knoxville, Tennessee.
Knoxville, Tennessee. Josh is in Virginia.
Yes, sir. DC area.
Yeah. Welcome, guys. Thanks for being here today. And thank you for the Family Office Insights community for being so active and joining us regularly on these webinars. Super appreciate your being involved in Family Office Insights, and especially through all this pandemic, and joining us in these webinars. Super grateful for all of you. As you know, we can't hear or see you as we can see our hosts or our presenters today, but we would encourage you to ask questions in the chat box of the Q&A as they come to mind. We have a lot of people coming on today. We'll get to as many of your questions as possible, but please feel free to put them in the chat box in the Q&A, and then we'll tee them up as we have time. As a reminder, we're going to be recording this and posting it on the YouTube channel for Family Office Insights. And if you care to visit it after seeing the presentation today, or are there others that you think would benefit from seeing it, you're welcome to send them there. And also, we'll make sure that you're all in direct contact with Derren after the webinar, and feel free to communicate directly. Just to be super clear, our objective today is to talk about veteran ventures and an allocation to veteran ventures. So please keep that in mind, and as well as others that you might think would benefit from participating as an investor in the fund. So again, thank you so much for being a part of Family Office Insights and participating as you have. And with that, Derren, welcome. Take it away.
Thank you, Arthur. And again, thank you for the opportunity and the privilege to present this, what we consider to be an outstanding investment opportunity. And so just, I'm going to set the stage, but then we're going to turn it over to Josh to talk a little bit more about the value proposition that we're presenting to you today. And after going through that, he'll turn it over to Steve Kaiser to talk about the due diligence and the deal flow and some of the technical aspects of what we are all about here at Veteran Ventures Capital. So I would like to just say, again, thank you for the opportunity. Veteran Ventures Capital, we're a veteran-owned growth equity investment fund, both impact and mission-driven, and pursuing investment outcomes identical in theme and spirit to an ESG type of opportunity. And that will be very evident as we go through the presentation. So my name is Derren Burrell, founder of the firm, but also a career in the military and the financial management arena that helped prepare me for this, among other things that you'll see as we go through this presentation. But without further ado, I'd like to go ahead and turn it over to Josh, if you would take it up and talk about who we are and why we're different.
Hey, Derren, if you don't mind, before you do that, because when we spoke initially some time ago, I think it would be instructive to the group to talk about how deeply involved you were in the deployment of capital on behalf of the, I guess it was Defense Department. Can you talk a little bit about that, because you had the pen for quite a bit of money?
Sure, happy to. Thanks for that, Arthur. My career in the military over 21 years, I was a financial manager, so I did not fly the planes, just helped pay for them. And Josh did that as well. But we're in the Pentagon together, managed a sum total of almost $40 billion together. That was done, again, a lot of contracting procurement actions that really you'll see help benefit now in combat capability and enhancement. Also deployed about $12 billion on the front lines of Iraq and Afghanistan, and finished up my time in the White House managing the communications budget for the president. And it decided there to make a transition to the private sector, and where I continued down the financial management career path, helping scale and grow businesses, and then actually coming in firsthand, raising a couple $1 million for the business that I was chief operating officer of, which later had an exit. And so all of those things came to be where we found that there was a gap in access to capital for veterans. Again, Josh will go through that here in a second. But that's really what happened is throughout a career of managing large pots of money and large, high visible, no fail type of missions, we bring that same mindset to this to this space as well. So appreciate that question, Arthur. And Josh, if you want to take it from here, that'd be great.
Great. Thank you, Derren and Arthur. Appreciate also, like Derren said, the privilege to be here today to talk to you about veteran venture capital. My name is Josh Weed. I'm another one of the partners at VVC, and I'm also an Air Force veteran, as Derren said, financial manager in the Air Force, and then also in the private sector. I'll talk a little bit more about my biography here in a minute. As Derren said, we are a veteran-owned growth equity investment fund. We invest into U.S. businesses that are founded or led by a unique category of entrepreneur, those who call themselves an American veteran. And while that may be a mission-driven impact investment, as Derren said, it's also performance-focused. And I hope that you'll see today that we will demonstrate that it's just smart business and that there's a big ROI there for the investors. By the end of today, I hope you'll conclude that our fund is unique and delivers leading financial returns while also making a difference in allocating capital to this group of veterans. And that is our double bottom line philosophy. Next slide, please, Derren. All right, so let me spend a few minutes on this slide to summarize why you should consider an investment with Veteran Ventures. It really comes down to two overarching advantages. First, the people, and second, the deals. So the first aspect, the first part of the people aspect is that high performance always starts with high quality people. And as investors, we are in the business of finding the elite of the elite and building teams around those individuals. Our most important focus is identifying that elite group of veteran entrepreneurs who have started their own companies and who will lead our portfolio forward. Veteran Ventures Capital interacts exclusively with companies that have military veteran leadership because we believe veteran leadership matters. We recognize the value of military experience and training and character in business operations. And we'll talk about that more on the next slide, why these veteran leaders provide a great ROI for your money. The second aspect of people is about building a superior management and advisory team within Veteran Ventures. As limited partner investors, you have to trust the team that you're investing in. So we'll intro the team in a little bit more detail in a few slides, but let me just summarize now by saying our team has worked at the highest levels of government and national security apparatus. We have an extensive understanding on where the future of technology is heading within the national security infrastructure, and we continue to harness those networks in both the private sector and the public space to the benefit of our investments. Let me say a word about me personally. I've managed both financial and procurement channels. About $35 billion was the appropriation that I ran in the Air Force and the Pentagon in the mid-2000s. I left active duty in 2012 and moved to the private sector and held both financial and operational roles in a distribution and manufacturing company, led 7 M&A transactions, 4 buy side and 3 sell side, and then culminated in the sale of our company to the public markets at a $750 million valuation in 2017. The rest of our team is also no stranger to venture or finding superior tech. We have tech scouts on our team who spent the last decade finding commercial technologies, matching those to government buyers, some angel investors who were early into now unicorn companies. Members of our team have worked in the government contracting space, responsible for leading a $500 million book of business. And we excel at securing additional sources of capital to our portfolio companies, whether that's government, non-dilutive research and development funding, or just growing the sales opportunities to government clients. The last key aspect of the people side of our team is that most of our general partners are veterans ourselves. We understand the military culture. We also transitioned from uniform and had a successful transition to the private sector. Not all veterans do, and so we feel very impassioned to help support that transition into the private business world. And we speak their language. We can decipher where best to use our lessons and our experience in optimizing that business operations. So in short, we're equipped to help veteran-led companies scale further and faster. So now let me move off the people aspect and talk about the second advantage to VBC, which is our superior deals and our deal flow. So we have an extensive network of partners that provides better access to these deals. We're analyzing companies before other investors. And so in a few slides, we'll talk about those partnerships, that deal flow process, and the infrastructure that we've built to source profitable opportunities for the fund and potentially you as limited partner investors. The military is more technically advanced than most every other industry on the planet. And our blended expertise in sourcing these deals and identifying the technology that will make a difference in the government is important. And that is a key differentiator of our team. Next, and then the second piece is I'll talk about the market. You know, whenever we think about making new investments, it's not just about finding companies, but it's also about where those companies fit into the broader marketplace. And so it's important to know, and we'll have a slide on this in a minute, that valuations in the national security and government space are increasing. The expansion of the defense innovation ecosystem is making it much easier for innovative and smaller companies to come in and disrupt the marketplace and win new business. So it's important for you to know it's not just about the major defense contractors anymore. So putting that all together to wrap up this slide before we move on, an investment into veteran ventures is about our people and our deals. So let's look deeper. Derren, next slide, please. So let's talk a little bit about the American veteran, because this is the founding premise of our fund. We believe veteran leadership matters. Something I'd like for you to ask yourself, who does the nation turn to in a moment of crisis, whether it's conflict, a natural disaster, or even the recent global pandemic? The military was asked to run towards that action. We don't run the other way. And so when we think of veterans, we think of the training and the teamwork, the poise under pressure, the determination and grit, the ability to adapt and overcome. In the business world, we refer to this as pivoting, a business pivot. The veteran is used to leading people and being responsible for high dollar assets as a matter of course. Where else in the private sector would you find a 28-year-old who's responsible for 100 to 200 people working for him and over $1 billion of physical assets under his care? That's every day as a company commander in the Army, and it's likewise in the other services as well. Veteran Ventures has studied the leading characteristics of Fortune 500 leaders. These same traits are developed and ingrained in our military at every level of leadership. So let me list some attributes, and you can decide for yourself if we're describing an entrepreneurial business leader or a veteran. Experienced leadership, adaptability, resilience, decision maker, system and process focused management, poise under extreme pressure, a mission first focus, and then the character, integrity, and discipline to do the right thing. In both cases, I think the spoiler there is obvious that the same traits that make great leaders in the business world are also some of those key attributes that we find in the military and veteran community. And for veterans, these aren't just taglines. These are core values, and they're attributes that are developed and earned through rigorous military training, and importantly, through really intentional leadership development and education. One thing that you find in military circles is that they invest in their people through education. I'm a graduate of the Air Force Academy. The Air Force also sponsored me to go get my master's and PhD while I was on active duty. That is something that the military has been doing for decades, and it's only recently that type of personal development and education in the skills and leadership to do one's job has moved into the corporate sector. And yet the military is producing veterans with that level of training and education every year. So let me put this into historical context, and I'll pull a few key notes off the slide for reference. Veterans have been the backbone of American business formation and growth since World War II. Data shows that veterans have always been more likely than non-veterans to start and own their own business. Half, if you can believe it, half of all returning World War II veterans started businesses. And by 1980, nearly 60% of CEOs at public corporations were veterans. And many of America's greatest companies were founded by veterans, several logos there on the slide, and there's many more. So the takeaway is this: the attributes of the American veteran leader, and dare I say the virtues, will translate to the private sectors. Veterans can and will excel as they're given the proper chance and opportunity, and they're supported by a team around them. But what is the missing ingredient in today's economy is access to capital. Veterans are 30% less likely to receive VC investment, even though they outperform their non-veteran counterparts. Access to capital is the single greatest barrier for veterans who dream of business ownership. I believe that. I've seen it firsthand in my transition, but you don't have to just take my word for it. Syracuse University's Institute for Veterans and Military Families, who studies these issues closely, arrived at that same headline conclusion in their report from 2017. This is the founding thesis and the motivation behind our Veteran Fund One, an investment fund designed to leverage the skills and resources and talents of veterans to start and scale their businesses to the next level. So let me make one final point for this family office investor audience, and that is, does your fund need to have a social impact? Certainly Veteran Fund One helps fulfill that, as we stated earlier, and beyond veterans as a class, our military embodies the diversity of America, pulls from all corners of this country, and our fund seeks to make the same investments, and you'll see that in the representative portfolio companies. So next slide, Derren, please. So let's talk about the market opportunity. Valuations in the defense technology and government services have more than doubled since 2013, as you can see on the chart at the right. And that's good news. And we do think that bull run trend is positioned to continue. So unlike what we've seen recently in some frothy industries in the public marketplaces, the defense sector is likely to continue to outperform in our view, and here's why. First, defense budgets are large and growing. So President Biden just released his fiscal 2023 budget about 2 weeks ago, and DoD's budget is the biggest in history, making investments in the future. Our fund is aligned to those priorities as laid out in the national security strategy and the priorities as laid out in the president's budget. The defense and national security space has steadier growth. We anticipate less cyclicality in the year ahead in these industries compared to what we're likely to see in the public markets as monetary policy adjusts and the looser money timeframe winds down. So there's both a fiscal need and a strategic imperative within the government to modernize and recapitalize our defense hardware and infrastructure to meet the challenges of the world that we now live in and that we're seeing on the news every day. That has created a renewed focus in many of the companies that we work with that Steve will talk about a little later. DoD is focused on innovation and supporting new defense and new dual use technologies. And so that means there is money available to invest. And it's becoming easier to do business with the government. So I'd like to highlight the bullet regarding technology, as this is a central focus of our fund. Today's military continues to outpace the nation and the world as it pertains to hardware and advanced technology. But our leadership in those areas is not assured. The department is focused on accelerating that change. They realize that they need to get more players in this space, more suppliers in this space who are creating innovative and disruptive technologies. And that is an opportunity for us to support those companies who are going to bring that technology and hardware to the government. So in this market environment, making these smart investments and leveraging the government's available non-dilutive capital sources will drive improved returns for our fund and delight our investors. Next slide, please. All right, so let's talk a little bit about the team. Again, best of breed here. In the interest of time, I'm not going to dive through each bio, but the first slide is obviously Derren and our strategic team and partners. You can read some of the bullets that there to highlight a few notes. We've assembled a great team, both management, which we'll talk about in a minute, and advisory. Derren is the founder and managing partner, as he introduced himself. Ken Hirsch is in his family office is our fund's lead and anchor investor. He has a superb investment track record, co-founded and built Natural Gas Partners into a $20 billion company, delivering 30% IRR over his 28 years. And his family office and their investment group is very involved with us and sits on our investment committee. Phyllis Newhouse is a perfect case study for our fund, Army veteran, superstar entrepreneur, successful investor, and a tech expert, and has a demonstrated track record in scaling and winning government contracts. So we see her as a fantastic mentor and role model to our portfolio companies, and we look to repeat her success. And then Last but certainly not least, General Sam McChrystal, he needs no introduction. A transformational leader, a strategist, tactician while in uniform. Out of uniform, he's built the McChrystal Group and is now a board member and trusted advisor to many Fortune 500 companies. And so we are proud to have him as both an investor in our fund, an advisor to our management team, and certainly a believer in our supporting our cause to help grow the next cadre of veteran business leaders. So additionally, our board of directors that are not listed here on the slide includes other generals, colonels, tech scouts, true subject matter experts that help deliver a network that is a powerful force in both identifying technology and conducting due diligence. Next slide. All right, so this is our general partnership group, trusted leadership that you can count on. We are a diverse group. I will say we have not come all from the same upbringing and background. As I said, there's two veterans on this slide, both Steve and myself. Craig has been around the security and international community for many years. And Paul, who's not a veteran himself, but has a son that has been around the financial space for decades. So we bring a really unique blend of talents and experience, as I stated in the opening. And I think one thing that I would lead before I open it up to the other folks to introduce themselves is that it's important to know that we are targeting a $50 million close of the fund this summer. And this team has the qualifications and the experience and more to deploy and mentor those 20 to 30 companies we're looking to fill out the entire fund. So let me pause there, and we've got Steve and Craig who round out our GP team with us here today. The bios are on the slide, but I'll pause to let Steve and Craig say hello, and then we'll hand the microphone off to Steve to walk you through our partners and our deal flow.
Hey, Josh, can we ask one question real quick?
Yes, sir.
You mentioned the non-dilutive capital advantage that some of these companies that you invest in might benefit from. Do you act as a catalyst to make that happen?
Yes, sir. So what we do, so for those that aren't familiar with that government vehicle, there are small business innovative research grants that are available, and there are contracts that these companies apply to. And it generally is an investment from the government to develop technology that they are interested in seeing come to the marketplace. And so it's really, it's like seed capital to get the development going. And we're not talking about a small amount of money. $750,000 is one we won for one of our portfolio companies. And so Steve will talk about that in a minute when he profiles some of our companies, where it really sort of doubles or even triples the impact we can have to a company where we might have invested $350,000 in one of our particular companies, Aero. And then Steve was able to leverage their technology and his contacts to win a $750,000 SBIR Phase 2 grant for the company and about another $350,000 through the chairman's program. And so over $1 million we brought external to our investor money. So yeah, the company sees a great value in that. They're not having to give up equity because the government is doing this through non-dilutive capital, as you said. So it's a really powerful way for these companies to scale. And that is an expertise that we bring to them that will help them write the package.
Great, thank you.
Okay, Steve, or maybe Craig first, and then Steve, why don't you do a quick intro and then we'll talk deal flow.
Sure. Hey, good morning from Hawaii. Just briefly, background, mostly in government contracting, defense and aerospace executive, worked extensively with software and systems developers, really thoroughly understanding a lot of the technology and the requirements on behalf of the Department of Defense, as well as broader federal agencies towards what they're looking towards adopting. A little bit more background in the past, working with one of the largest exporters out of Australia, Aspen Medical, on expeditionary healthcare solutions for about 7 years, and most recently a private equity-backed company in the defense technology space. Really pleased to be here today and appreciate your participation.
Hi, good morning. Steve Kaiser from San Diego. 20-year Air Force veteran, had the opportunity to do 8 combat deployments during those 20 years. And like Josh, was very fortunate that the Air Force decided to invest in me. Went to the Air Force Academy, graduated in 1990, had the opportunity to go to night school to get my master's degree, and then was picked up for a full-time PhD in policy analysis and statistics during that time frame. Was able to do a lot of very interesting things in my career. Did work a lot with command control communications, surveillance, reconnaissance, artificial intelligence. Spent a couple years doing space work. It was a fantastic career. Transitioned from that in the late summer of 2010, and joined a company and became a tech scout for the Defense Department, which I did that job for several years, and was fortunate enough to get promoted within that company and became the vice president of engineering and analysis for that company, and set up home here in San Diego, which is very much a tech center of the West Coast, in a variety of industries, and continued that work for some time. Led about 800 people in a very large book of business before retiring from that in January of 2020, and have been part of VVC ever since then. And I've been an active angel investor since the summer of 2011, and have been very blessed to have met some amazing entrepreneurs and spent a lot of time with other angel investors. And they've been generous enough to teach me a lot, and it's been a wonderful experience.
Okay, who's up next?
Steve, that's you. Let's roll to the next slide,
Okay,
Darren.
let's go to the next slide then, Darren. So again, I'm Steve. We'll talk a little bit about dealflow. I'm going to reinforce some of the things that Josh has already said. But the process that we review and identify and review companies is very well established. It's multifaceted, and it's extremely disciplined. And we bring several strengths to our deal flow, which we think differentiates us from the majority of other venture capital companies out there. Our first differentiator, as Josh alluded to, is that we have nearly a century of experience between us in the finance and technology sector, both in the private sector and in the government sector. So we have a very good bedrock of knowledge about what it is that we're trying to review and what it is that we're identifying. Secondly, we have extensive relationships, as identified here on the slide, with a broad range of organizations within and associated with innovation, technology, and the government innovation space. These relationships span, multiple verticals. They span both private and public, and they span multiple industries. And then third, we have an ability to ingest and understand the myriad guidance that the government issues each and every year that details exactly what the government's requirements are, i.e., this is what they want to buy. We understand all of the guidance the government issues on how much funding they have available to buy these requirements. And then we understand how and when they're going to make these investments in these technologies. Now, why these three strengths primarily derive from our experience with the US government, we focus on those companies that have dual use technologies. And by that, we mean that both the private sector and the government will be potential buyers for their products. It's also very important to note that this set of capabilities usually gets us to companies a lot sooner than other investors get to them. And we found that we have very little competition for the deals that we pursue at the time that we're pursuing them. And so those relationships are critical to set us up for that kind of success. Now, once we've identified a company of interest, and we do that by attending tech scout forums, we do that by attending militarily sponsored technology proposal forums. We go to several conferences, and frankly, we have a lot of people bring deals to us. And so we'll review all that for a variety of things. We perform multiple tests and reviews as part of our deal flow. In addition to making sure that each of these companies meet the technical requirements for our investment, i.e. they must be veteran-owned, veteran-started, veteran-led, and be post-revenue and in the growth series, we do a set of standard financial reviews. We do a lot of technical reviews to make sure that the product that they're building actually passes muster and isn't vaporware. We do a lot of product reviews, comparing their products with their competitors, what groundbreaking advantages that they might have over their existing products. We do a lot of market analyses to make sure that the market is big enough to support the multiples of growth that we expect from our invested companies. And we do a lot of key person analysis. As veterans, we're always looking for those leaders. We've picked leaders before in our previous careers to as our own subordinates. We've also seen what makes successful leaders in the people that we followed. And so we want to make sure that the companies that we invest in are led by those people that have all those successful traits. Now, it's important to understand that that the marketplace allows us to identify opportunities earlier and faster with higher conviction. As companies move through our review, those same relationships allow us to perform a much more detailed due diligence process and arrive at conclusions much more quickly. For example, one of our more recent investments featured us conversing with people at the Defense Advanced Research Project Agency, NASA, the Pentagon, U.S. Space Force, former congressional staffers, and lobbyists in that particular industry. We did all that conversing within 10 days. This provided multiple third-party validations of all the technical, financial, and market claims that the company presented to us during their pitch to us. And it also made us much more comfortable to make a larger investment in that company than we might otherwise have made. It's also important to note that we're a very high-touch capital. We go into every investment with the mindset that we're going to do what veterans do for one another, that is, support one another. One of the things that veterans are earmarked for or hallmarked for is that they always know that the person on the right and the person on the left is going to make sure that they get home safely. In other words, they collaborate. It's just part of their DNA. It's very much in their nature. And so we want them to understand that not only are we providing them our capital, but we're also providing them our expertise and our support to make sure that they have the greatest chance of success as they build out their company. We provide them advisory services and strategy, networking, business development, finance, contracts review, and then help them find the non-dilutive capital opportunities that Josh was just speaking to. One of the interesting things about the US government right now is that they are so intent on increasing the innovative capacity of the US industrial base as well as the government, that there are literally dozens of non-dilutive capital grant opportunities throughout the US government, but particularly within the Department of Defense. We, as a venture capital firm, have identified 13 specific programs within the DoD that provides up to $15 million per applicant of non-dilutive capital. We've developed relationships with each of those offices. We've applied to many of those things, and our rate of winning those opportunities is above 50%. So again, we're experts at bringing that non-dilutive capital. But getting back to the earlier thesis that we are very much a high-touch capital, venture capital organization, we want to make sure that the leadership and the team that we're investing in not only will welcome that sort of help, but they will also thrive because of it. And so that key leader analysis is something that's very important to us. And finally, before we get into some of our portfolio, it's important to note that we have an entirely second half of our due diligence. And that is, we do due diligence into the investment vehicle itself. That vehicle has to be very much an investor-friendly vehicle, provide a fair valuation and a fair entry point to the investors, and have significant investor rights in order to protect the upside of the investors. We've convinced multiple high-level quality companies to modify their vehicles in order for us to invest in them. And in some cases, we've actually passed over high-quality companies because their investment vehicle simply didn't pass muster with that. And with that, let's go to the next slide, Derren, and we'll talk about some of our portfolio companies. Well, actually, let's talk about portfolio construction and risk management just for a brief moment. Our typical investment is going to be $1 million deployed in our first round and reserving pro rata rights of up to $5 million for follow-on rounds. We look for post-revenue, defense-focused, dual-use technology, and again, that is veteran-owned. Now, when you hear the phrase DoD and tech-focused, a lot of times you might think that we're very concentrated, but that's simply not the case. The Defense Department is the largest purchaser of goods and services in the world. And because of that, we can obtain an extraordinary amount of diversity within our portfolio while still focusing on those main theses that we've already discussed. We try to make sure that no more than 25% of our portfolio is focused in any one industry or sector, which provides that diversity and minimizes inter-portfolio correlation risk. Now, our exit strategy is something that we focus on from the very beginning. Many times we'll look at an investment and discuss amongst ourselves if we can draw a straight line between the investment as we see it today and a liquidity event within several years. We do have a 10x ROI mentality, and we look to hold our portfolio companies for no more than 5 years. And in fact, 2 of our portfolio companies are already in the early stages of that liquidity event, and we've held them for less than 2 years. Next slide, please. So instead of going through all of our portfolio companies, I would like to just select one, and then we can take questions by exception. And let's go to the next slide, Derren, and we'll talk about Silent Aero. Josh mentioned this briefly in his comments. Silent Aero is one of those groundbreaking companies that is going to have impact in multiple industries. They have 3 products that are all heavy-duty cargo glide vehicles. One can move 750 pounds of cargo, one can move a ton of cargo, and one can move 3 tons of cargo. And they are simply kicked out of another airplane or a helicopter that's ferrying them, and they glide to their target, gliding sometimes as many as 50 miles away. The reason this is groundbreaking is because it solves 2 fundamental problems. For the Defense Department, it solves the problem of overcoming all of the challenges with overland logistics. As we saw in the conflicts in Iraq and Afghanistan, one of the biggest, softest targets for our adversaries were the long cargo caravans that were moving over well-known routes to resupply our bases in various parts of those countries. As those cargo convoys became more and more vulnerable and therefore became under attack more and more, the US government spent an increasing amount of its military strength on playing defense to protect those convoys rather than being offense. This would help address that problem. The second problem it helps is that with humanitarian assistance and disaster response. Their current concept for responding to a natural disaster, for example, is to find the airport that's closest to the natural disaster itself, fly in cargo loads of or aircraft full of cargo, unpack that cargo and stack it on the tarmac where it sits for days or in some cases weeks as land bridges and roads are opened up to get to the affected areas. In situations like this, the Silent Aero cargo gliders could simply be used very quickly to move with GPS precision thousands of pounds of cargo within hours of the tragedy directly to the villages and towns where those natural disasters have occurred. And it's not by any coincidence that once the conflict in the Ukraine kicked off, that Silent Aero was contacted by 3 different organizations within the US government asking to see how quickly they could ramp up production and how quickly they could deploy that capability to Eastern Europe. Now, the total addressable market there before the Ukrainian invasion, we assessed to be about $5 billion. That TAM has probably increased by at least 20% because of that conflict. We have helped Silent Aero by doing both business development on their behalf, but we've also brought in 2 different non-dilutive grants, one for $750,000, and Josh, not to correct you here, but the second one was actually for $500,000. And so our $350,000 initial investment has been matched by $1.25 million of non-dilutive grant money by the US government. We're also looking at a third program for them now that they've grown to sufficient size, where they're now eligible for a $1.8 million non-dilutive grant later this calendar year. And we've been strategizing on exactly how to do that. In addition to that, we've helped bring Silent Aero to 3 international customers, as well as the United Nations World Food Program and the United Nations Humanitarian Air Services. So we believe that our hands-on approach to this particular company has been extraordinary in supporting its growth, reducing its technical risk, and expanding its exposure to multiple customers around the world. And with that, we'll let any other questions about our other portfolio companies come by exception. And Derren, I'll turn it back over to you.
You're on mute. There you go. Thanks. Can we jump in with a couple questions here? This is fascinating Silent Aero. Who would have thought? We've all seen pictures of the rescue missions with parachutes dropping pallets of stuff. Is part of the benefit of doing this that it's a controlled glider and it could be more precise on where it lands?
That's exactly right. So that's called the JPADs, the Joint Precision Aerial Delivery System. And that was the answer back in 2006, 2007 to some of the problems that we spoke about. The third advantage to the Silent Aero is when you're in a cargo aircraft, parachutes have the tendency to go straight down. No, they have some ability to glide a certain amount of distance, but the bottom line is that the cargo aircraft that's dropping the JPADs has to, by definition, be in enemy territory. In this situation, a cargo aircraft can stand off by as many as 50 miles away from a location and be able to project those logistics into a threatening situation. So for example, if you had a small ground unit team way behind enemy lines, a cargo aircraft could then project that logistics behind enemy lines to support them and do it in a relatively safe manner. And the odds of the enemy being able to see where that cargo glider is going is pretty small because it's gliding at about 150 miles an hour in a horizontal configuration rather than floating down from the sky, and you can just look down and determine exactly where the recipient of those goods are going to be.
Not to get too much in the weeds, but does it need a landing strip?
It does not. It can land on roads, parking lots, fields. And we've done a lot of modeling and simulation on that. It can land on anything that as much as a 20-degree tilt in the land. And so it's got a big landing skid on it. It flares right before it lands. And so it tail drags to slow itself down along the ground. And so it's able to land, obviously not in the woods. It's not going to land where there's a lot of trees, but anywhere there's an open area with less than 20 degrees of geographic slant, it can land there.
Yeah, super cool. We have a question. Can we jump back to the structure of the investments? One of the challenges of an entrepreneur and companies has been how diluted they get as more money comes in. And I'm seeing that you have up to $5 million follow-on round. Have you been able to negotiate non-dilutive rounds? Or non-dilutive rights is the probably better way to put it.
So are you talking about when we garner those non-dilutive grants from the government?
No, what I'm so if you're an equity investor in a company and then they raise more capital around B, C, D, and E, you tend to get diluted without those rights, right? And those rights are very difficult to get because the new money doesn't want to be subject to, somebody who's not going to be diluted along with them. Is that something you've been able to accomplish?
Yeah, that's certainly something we pursue, and we do have a few investments where we have been able to secure those participation rights to keep pro rata rights on the follow-on investments. I can think of two off the top of my head, and it's certainly something that we pursue. There's obviously in some cases we are deal takers. Some of the smaller times where it's our first time in, maybe someone else is leading the round, and we are evaluating the company based on the terms of the agreement. And in other cases, we are driving those terms. And as Steve, I think it was Steve said, that in 2 cases, we were able to completely improve both the valuation cap on the deal, as well as make sure that we had that participation rights. And we were able to structure the deal more beneficial to our fund. But like any investor that's in the venture space, even at the convertible note stage, that equity participation rights, a lot of times you're beholden to the terms of the convertible note, and it's not until they do their first equity raise where that becomes important.
Right. Another quick question: are the companies that you're investing in required to be certified veteran-owned entities? I don't know if that's a thing, but is it a thing?
It is a thing. It is not something that is required here. So what we try to make sure that we are investing in is someone who's had the skills and the training and the technical competence that Josh talked about. They're leading the strategic nature of that company and the direction of when it's going. That could be 5% ownership, right? It's not something where what you're talking about is a certified service disabled veteran-owned business, which we are, but that's not required for those companies. That's 51% ownership and a lot of other regulatory requirements. What we're looking at is there someone leading this company that has those skills, those traits, and is actively pursuing excellence from that growth stage of the company right now. So that could be it could be 100% owned, it could be 5% owned. Typically what you're seeing is someone that's on the cap table in the C-suite, and that's really what we're looking for in terms of the investment thesis overall.
Yeah, the spirit and skill of a veteran. I get it. I mean, you guys made it super clear. So one more quick question, because I want you guys to be able to get onto what you want to get. What is the earliest stage company you'll invest in? It's clearly
Right.
revenue positive, right?
Right. And so what we're looking for there is we're de-risking that investment to the highest level possible for both us and the LPs, as well as for those businesses. So we're looking at someone that has traction, that has some level of revenue, and is looking to potentially get into government procurement channels of some sort, whether that's non-dilutive or not. So if we can take in those companies, and do we have a set dollar amount? No, we don't have a set dollar amount. However, I can tell you that our sweet spot has been about $1 million in revenue. And again, those people that are looking to get those SBIRs potentially for that dual use technology, public and private. So those are the types of companies we look at. But what we really look for is, as Steve mentioned, that market opportunity, that the total addressable market, and how much can they get out of that, and then where are they at in that cycle. And so it's just a matter of, we're not pre-revenue type of companies. That's not where our specialty is, but we certainly can look at almost anything that has that traction and wants to move forward.
Yep, totally makes sense. Josh, you up?
Yeah, let me just add one more thing to that, because I think that's a really important question about sort of when is too early, when is it too early? And so, we do see a lot of companies that we would say, hey, we're interested in the technology, we think there's a great market there, but you don't have enough traction, and part of that's revenue, and part of it's sort of a business development and pipeline analysis of their future. And so one of the things that was pointed out on the partner slide, maybe you can just flip back to that for a second, Derren. There is a military ecosystem that is there to help some of those companies. And so even though we may not write that first check, we are supportive, and we have great partnerships with Bunker Labs, which has a lot of innovation and growth capacity for veteran-owned businesses. The Veteran Entrepreneur Investment Program does a lot of education for these businesses that are starting out, and then of course the Veterans Business Battle that's through the Rice Business School. Those are partnerships that we've built over years, and we are plugged into that ecosystem. And so a lot of times when we see a company, we may say not yet, and then we're going to plug them in with other entrepreneurs, other supportive ecosystems to get them to the point then where we can come back and say, okay, now you've demonstrated a track record. We liked your technology. We've known you for a few years. And now it's time for an investment on our behalf. So I want to just make sure that it's clear that when we think about cultivating a deal flow, it is an active game, right, of identifying companies and making sure they're successful, and then making sure the investment's de-risked.
Well put.
Great, thanks.
So again, as we kind of walk through all of the different portfolio companies, if someone has a question now, that's great. But we also want to take time afterwards to individually go through some of the success stories of each one of these companies on an individual basis for those interested in seeing what we are all about. And as far as the fund terms, we've talked a little bit about it. It's very standard in terms of a traditional 2net20 structure, 50 million raise, looking to close this summer, as Josh said. So you'll see that the docs are very standard. They're done by one of the most recognizable law firms in the country in this space. And so that's not something that we've ever had any indications that it's nothing less than some of the top in the country. So that it really comes down to the theme, right? It really comes down to what we can bring to the table in terms of active engagement and finding the right deals and helping them take their companies to the next level. And so that really is the bulk of what we wanted to talk about. We're happy to take additional questions. Arthur, if you have some more that came through the chat, or any other things that are outstanding.
Yeah, so you've raised quite a bit of money already since the last time we spoke, right?
Correct. We're about 15 million into the 50 million raised, and we have a very good pipeline of almost double that number of in the 70% range or higher. So it's we're well on our way. We do believe we'll get to that goal. We are just looking for not necessarily just a dollar. We're looking for the right money with the right partners who share that mission and vision of a double bottom impact of where we're at.
How long, let's say that you closed the fund in the next couple months and raised all the money, how long would it take you to deploy the rest of it? Just a guess.
So the deal flow is incredible right now. We saw about 500 deals in the last year. The deal flow is not the problem. It's the deployment of capital would be done in a rapid succession. We believe that we'd be starting fund 2 sometime next year, probably Q1 of next year. So the deployment, if you're looking for a fund that's going to put your dollars to work in an expedient manner, I think we'd fulfill that as well.
What's the if you had to predict the of the companies that you've invested in so far, if you had to predict, I just want to put this the right way to not put you in a corner. How are they doing, and are they likely, what you have in the portfolio so far, be companies that just grow and do next rounds, or are they going to be exited and bought?
That's a great question. So where we're at in the spectrum is that, Series A-ish area, probably a little earlier than that in some respects. So that happens, but we're still early enough in the business cycle that the most likely exit scenario on these companies is a merger or an acquisition. So you'll see them, they're going to go into the governmental space. They're going to start taking the market share from a larger defense prime contractor, who's then going to use a defensive play to take them out at the type of return rates that Josh talked about on his governmental slide. So they're going to be trading at a higher margin, but that's typically what you're going to see. We do have companies that are planning, and it's the competitive analysis that they do. They show the different levels of what the next rounds are going to be, and so we do see that. But a lot of times they're going to be taken out early on as more of a merger with a larger player in that space. I hope that answers the question.
Yeah,
Josh,
totally made sense. We have a question about opportunity zones and whether you have been focused on that, or just it's a coincidence that you might invest in a company that's in an opportunity zone or fund?
Well, we wouldn't invest in another fund, but we do invest in companies that do. In fact, there's a couple of companies that are actually in their deal flow today that are actually in opportunity zones now. So we don't actively seek it, but they do come across our radar as part of the deal structure and some of the incentives associated with that.
You talked earlier as a group that it's getting easier and there's an incentive and desire to make it easier to do business with the government. And traditionally it's been through the primes. Sounds like I know what I'm talking about, right? Is the narrative actually happening?
Yeah, it's a great question too. So really, the legislation has been passed to encourage small businesses to be more competitive with the larger counterparts. They came out with regulatory requirements that say contracts under a certain dollar amount, I think it's 100 million, are required to be competed in a much more broad fashion that allows smaller companies to compete at the same level as some of the larger defense contractors. So you do see some, and again, while we don't require these certain certifications, if they come to us with certain requirements of veteran leadership, veteran ownership, and even service disabled veteran ownership, those are different classifiers that help them go after these bids in a non-competitive manner, where they would be a leg up on some of the other companies that are competing for those same requirements. So that's something that is continuing to evolve. They had lots of legislation passed within the last 10 years or so to encourage that, and it's just taken a while for it to settle. And that's, I think, what we were talking about, that it's really starting to become more commonplace.
And Derren, if I could follow up on that, some of the practical impacts of that are just the way that the government buys wholesale. There's much more direct contracting with small businesses that don't even go out for competition. Just in the last 24 months, there's been this flourishing of these things known as other transactional authorities, which are extremely simplified processes for the government to be able to buy from small companies. So one of the challenges that small companies had is government contracting is just so Byzantine, and the oversight of that is so burdensome that they didn't have the knowledge nor the financial resources to do that. And so just in the last 24 months, there's been a sea state change in the government's ability and willingness to directly engage with small companies.
And give us an example what they would be procuring.
Well, they procure all sorts of stuff that way. Again, the US DoD is the world's largest purchaser of goods and services. And so you can imagine everything from, cutting the grass and trimming the trees to dry cleaning, all the way up to, major procurements of large things. So the definition for what is a small business set aside is now $100 million. And so to Derren's point, a lot of the contracts that are $100 million or less are specifically set aside that the large contractors can't even go after those anymore. So you can imagine what kinds of things that you can buy for less than $100 million. The second trend I think that's really important here is the digitization of everything right now. And so big data, artificial intelligence, machine learning, software, all those sorts of things can be done by much smaller companies because you don't have to have huge CapEx, you don't have to have a lot of headcount, and you can still make major contributions there. So there is an enormous amount of purchasing of that. I'll just give you one example, surveillance from space or space services. It's not that expensive to build a satellite and get a satellite up on orbit now. So you can see this extraordinarily rapid growth of small space companies that the DoD is buying services from them for weather, for communications, for surveillance, for precision navigation, all sorts of stuff. And that, costs in the tens of millions of dollars rather than the billions of dollars that it did, just 2 decades ago.
Yeah. Yeah, I think I mentioned it to you, Derren. 2 years ago, I was able to invest in a company called Relativity Space. They do 3D printed rocket fuselages, and they went from a $400 million valuation to a $4.2 billion valuation in 2 years. It's crazy. Well, this has been super helpful, guys. We do need to wrap it up. Anybody want to, Derren, you want a closing statement? And
Yeah,
for the group, I'll just help because I can say this: hurry up and send money, or you're going to miss out in the fund. And if you don't send money on this one, you can't get into the second one. And that's all bull, but I just had to say that. There you go.
No, I appreciate it, Arthur. Again, I just wanted to say thanks again for the opportunity. I hope that y'all have seen that this is a unique opportunity. The team has been gathered together for just such a time as this, and we try to make it just real easy to understand. It makes good business sense. Josh talked about not only the business of veterans, but also good, financial sense in terms of a great return. And then just good common sense. What we have seen is the attributes that are bred in the military are perfect for small business. And so with that being said, please do contact us afterwards. And we look forward to kind of just wrapping this fund up, being the first of several. And we do think that this could really help us, vault us to that closure, but also ultimately we could see military service become the gateway to entrepreneurship.
Excellent. Brilliant. Thank you, guys. Super, super enjoyed it. And nice meeting you guys this time around. So again, thank you everybody for joining today. And as I always say, thank you for spending with us the only thing you can't make more of, and that's your time. Next time. Thank you, guys. Bye-bye.